Energy Information Administration forecasts that U.S. crude oil production will average 9.4 million barrels per day in the second half of 2017, 340,000 barrels per day more than in the first half of 2017. Production in 2018 is expected to average 9.9 million barrels per day, surpassing the previous high of 9.6 million barrels per day set in 1970, based on projections in Energy Information Administration's short-term energy outlook. The short-term energy outlook projects that most of the crude oil production growth in the second half of 2017 will be in the Permian region, which extends across western Texas and southeastern New Mexico and has become one of the more active drilling regions in the United States. Production in the Permian continues to increase, in part, as a result of West Texas Intermediate crude oil average monthly prices that have remained higher than $45/barrel since the second half of 2016. In the short-term energy outlook, Energy Information Administration publishes crude oil production projections for Alaska, the Federal Gulf of Mexico, and the aggregated lower 48 states. However, each month in the short-term energy outlook, Energy Information Administration models oil production for certain states and regions within the lower 48 states. Short-term energy outlooks projected U.S. production changes for the second half of 2017 are discussed in more geographic detail in the latest This Week in Petroleum, which includes information on production in the Permian, Niobrara, Anadarko, Bakken, Eagle Ford, Alaska, California, and the Gulf of Mexico. The short-term energy outlook forecast is based on recent trends in drilling and production and on anticipated future changes, driven largely by the West Texas Intermediate crude oil price. Energy Information Administration evaluates past production trends on a well-by-well basis for all production documented since 2014 and uses that history to estimate future well performance and production decline rates at the state and regional levels. In the lower 48 states, rig counts typically follow changes in the West Texas Intermediate price with an approximate 4-month lag. Changes in the number of active rigs lead to changes in production volumes within about 2 months. Consequently, the short-term energy outlook oil production forecast is based on the observation that changes in production volumes typically occur about 6 months after a change in the price of crude oil. The forecast is also influenced by estimates of cash flow and production costs, which vary by region and over time. In addition, the outlook makes assumptions regarding how the inventory of drilled but uncompleted wells responds to price and how that response affects production at the state and regional levels. All historical production data in the short-term energy outlook are benchmarked monthly to Energy Information Administration's monthly crude oil and natural gas production report and to Energy Information Administration's petroleum supply monthly estimates at the state level. The October short-term energy outlook forecast for oil production is benchmarked to the petroleum supply monthly data for July 2017 that was published at the end of September. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.